Gunjan, this has been a huge shift, a massive one in narrative and sentiment over the course of just maybe a month's time. What exactly happened?
It's been such a big shift, and how quickly it has happened. The S&P 500 is up, 7.2% over the past 2 weeks. That's the best 2-week stretch of the year. And what we've seen is just this huge shift in positioning among investors. Investors are piling into U.S. stock funds. They recorded around $4 billion of inflows over the past week, one of the biggest hauls of the autumn. Hedge funds are slashing their bearish exposure to the S&P 500, NASDAQ. They don't want to be caught flat-footed if this rally continues. And individual investors just say they're feeling more optimistic about markets. They're saying, we think this can continue.
What exactly happened? Was it Fed-driven? Was this idea that the Fed might be done raising rates, or that inflationary pressures were easing, that the jobs data was coming in, not soft, but softer than expected? Is that what's really fueling it? Is it purely interest rate driven for that sentiment?
I think interest rates are a huge part of it. All three of those things that you mentioned have certainly been drivers. And I spoke with investors who said, look, we think the Fed is done. Despite what Powell said last week, he said it's too early to declare victory on inflation. Investors are declaring victory on inflation. We think the Fed is done. And many investors I spoke with said, look, if interest rates have peaked, this is a good time to buy stocks. We think the risk reward between stocks and bonds is more attractive now that it looks like the Fed is likely done raising interest rates. Investors also got a bit of good news from the Treasury, where that auction, they issued less debt than anticipated. And that really marked a turning point in this rally, where we saw investors hang on to that. And now they're betting that momentum can continue through the rest of the year.
The quarterly refunding announcement was one of those big catalysts, right?
Huge.
We didn't think that we were going to need as many coupon securities down the line, longer-term debt and everything else. One of the things that I thought was interesting that you've highlighted over the last several days is this notion that there's been increased options activity in the marketplace, specifically towards options that allow people to buy the market at a predetermined price in the future, those so-called call options. Some traders look at that as a bearish, or rather a bullish signal, and a removal of some bearish signals on the other side. What exactly are you reading into this surge that we've seen in options trading tilted toward those positive type options?
That's such a good point. It certainly is a sign that people are becoming more optimistic. I spoke with one investor who said, look, I've been so cautious for most of this year. I thought there was a recession coming. He was looking at some of the momentum in markets recently and said, look, I don't want to be left behind if this rally continues. So, I have some of these short positions. I'm going to buy some of those call options so that I can participate in any rally that might come in the next few weeks. So it certainly is a sign that people are trying to ride the momentum higher in the market.
Now, there is momentum. There's no doubt about it right now. We've seen it over the last couple of weeks. Moody's came out with some negative commentary in the last few days. Now, they didn't outright downgrade the U.S. debt, but they did put it on a negative watch type scenario where they're saying, hey, maybe things could get worse. We could downgrade in the future. Does that derail the momentum?
It's interesting. I was looking at treasuries before we started talking, and it doesn't seem like there's a huge move in yields this morning. We're hovering around 4.6%. It's kind of where we ended Friday. Of course, as you know, the bond market is the #1 thing to watch right now. Heading into this week, we have CPI tomorrow. We have PPI on Wednesday. We have retail sales. I think that's going to continue to be a source of anxiety for investors, is what are bond yields doing? I think that's the first thing people look at these days, as to what is the direction of the stock market. But so far, I don't think that Moody's announcement is moving the needle too much, though I think Wall Street, has been worried about how many bonds can Washington issue, and what is that limit exactly?